Welcome to Java. Thank you kindly for joining me. It's February 13th, 2025. It is also Thursday. So I wanted to quickly thank everyone that came in and participated in the Discord discussion last night. I always really appreciate hearing from you and the things that you would like to discuss as well. So it was a good chat. Thanks to everyone there, as well as everyone that is here every day. Again, if you're new, I hope you enjoy this and like what I put together for you. There's quite a bit to cover today. It was a very interesting day yesterday, so let's go right into it. Starting with our favorite risk indicator is the MMRI. Now, above 310 again, so this is extreme high risk area. However, the thing to note was from yesterday, and this is the 10-year yield. Now, yesterday it spiked after the core inflation or CPI numbers came out yesterday. That is a problem. So, the instability in the 10-year yield is really what we're watching. It's come back down since then. It's just about 4.6. Yesterday it spiked higher. And what we're watching as a cap is really pretty much that 5% level. If it hits 5%, and it stays there in a rapid fashion, that is a big problem for multiple reasons. So we'll keep an eye on that. The second part of this is the relative strength of the dollar. Now, come back down below the 108. And I think that just above 108 is kind of what I'd like to label wrecking ball status for other currencies. Now, there are a lot of things that have moved these two a bit lower this morning, some geopolitical events that have happened. We'll speak about that. But with these two moving lower, we've got the fear greed meter still in fear territory. So daily driver right now is we're kind of in a recovery mode from hot inflation yesterday. So we're seeing a bit of light greed as pretty much they bought the dip again, still lower amounts though, and a little less of a resilient recovery, if you will. Now, with this, we've got the futures are looking also a bit green, but only slightly. Nothing major here. Now we're watching crude oil take a hit, and this is on peace talks. So we will cover that a little more detail later. We've got cryptocurrencies that have stayed relatively level, and they're normally the most volatile of the group. So we've got Bitcoin above 96,000, and this is holding well for cryptocurrencies. Two things here. First off, cryptocurrencies. Second is gold. Now, gold 2,900 plus. Why is this such a big story? Is because despite all of the volatility and other things, these two would normally move a little bit more, but they're holding steady. And they're definitely, gold is a risk off asset. So money staying between these two without flowing out, that is a telling sign as well. Now, today, we've got PPI coming out. So PPI, producer price inflation, as I said yesterday, this is the businesses. And as their prices increase, that means that they will be increasing the prices of their products or services. So again, more inflation. So we'll be watching towards employment as the breaking point, because we are hitting a point to where this risk is too increased for my liking as far as the markets. So watching the 10-year yield, if that risk level starts going off, that sell off in the debt market is your easy early sign to kind of evade, if you will. Now, markets yesterday got crushed with that hot inflation temporarily. So the reason for that is because that means Federal Reserve will not put in cuts anytime soon, and therefore there's no easy money to flow into these markets. Dollar stays strong, markets not so strong. So in this environment, DCA stands for dollar cost averaging into real assets, because we are facing a major revaluation between the debt and what is going on with the debt market, the 10-year yield, and the exchange of currencies in the midst of these trade wars, there will be massive revaluation incoming. The only way to kind of hedge yourself against this, if you will, are real assets, which include silver, gold, uh, any self sustaining methods. You've got farms, that type of thing. So we are in what is being labeled as stagflation light. The economy may face fresh threat of slower growth going into rising inflation. So as people lose their jobs and they lose the ability to make more money, less prosperity, and the prices going up at the same time is a recipe for some pain down the road, so to speak. Going into the economic calendar, we are getting initial jobless claims prior to the market open, as well as the PPI. So with this, we'll be watching these, and then Friday prior to the market open, we're getting more import price index and more numbers coming out. Now, these are, uh, even though these are so-called lower reports, they're not as affecting. I like them better because they're much more likely to be honest reports and have the actual numbers. Now, little bit of administration things that have happened. The FDIC, Federal Depositing uh, Insurers, so the government insurance for the banks. This is someone who has worked for them. He is now in charge of the Consumers Financial Protection Bureau. This was one of the latest government agencies that has had an axe taken to it, so to speak, and kind of gone over through Doge. So taken apart with a lot of the corruption. They've now got a new head here. We'll see how this comes out. He will be leading this office of the comptroller of the currency. So I don't know a lot of background on him, apparently, but if he's getting the nod, we'll see how this shifts forward. So banking as a general whole is about to take a major shift, as we all know, heading towards cryptocurrency. So I would like to mention Robinhood is the exchange moving into banking. They had huge earnings. They have a massive increase in the stock price since last night. And what this is saying, this could bode well for Coinbase. So moving forward, these two, since they are very user friendly, will attract the most attention, at least from the get go. They're going to be the new two banks on the block, if you will. They'll get more heavily regulated, but with that regulation, they will become the magnificent banks of our very near future here. So, as I was saying, watching employment, we've got a little bit of an issue with the oil coming down with all of the peace talks. We've got Chevron having to cut costs, so they're cutting 15 to 20% of their workforce. So, this amounts to about 8,000 people, and you're talking about globally. The problem with this, and what we need to watch, is this is a beginning step, and we're watching for continuance of more cost cutting, meaning more job cuts. So, moving back into the payment sector, which is really what is going to usher in the cryptocurrency standards and moving into this new digital central bank digital currency system, MasterCard. They tokenized 30% of their transactions last year. So, if you're using a MasterCard, chances are very good that some of your transactions were tokenized last year. So, we're rapidly moving onto this system. Now, we've got a company called Fold, 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 and Visa now boosting their Bitcoin adoption with a new credit card. So, with all of these rewards credit cards, so to speak, they've got a new one launching Bitcoin rewards. So, with your spending, every time you charge, they're offering up to 2% in Bitcoin back, not cash back. So, this is going to drive a bit of adoption as well. Um, Back to the chip sector and the drivers of this, Taiwan Semiconductor could be the lifeline for Intel. So they're talking about a United States backed joint venture. This would help multiple fronts, particularly with Taiwan Semiconductor. They would also be able to bypass some of the sanctions that are coming out, as well as boost Intel with a bit of well needed backing, not just backing, but also another location and inexpensive labor. So, kind of working both together. Now, I thought another very interesting uh, item coming out is that Apple supplier Foxconn. So this is really not so much about Apple other than bringing in the product, but Foxconn considering buying Nissan. Now, Nissan was in talks with Honda that fell apart, no longer on the table, but they're considering buying out the Nissan shares if they can get an EV deal. So if they get an EV deal, working with Apple could be something larger on the horizon that they are looking at potentially down the road. So, just an update on the United States with the reserve bills for Bitcoin as a reserve currency is heating up a bit. So now there are 20 looking at doing this, and this could be very, very positive for Bitcoin. So I wouldn't bet against it. We're still early in this cycle. Can it drop more? Of course. I don't know what the future will be. Could drop quite a bit. There's still lower numbers in play. However, it's not required, and it could very definitely go from here. Shifting over, I would like to speak about geopolitics for a moment because this is a master effector of, first off, rates, second, global trade, which affects the currencies, third, and these currencies are kind of the underlying that is also following through with the debt market. So, with all of these, we've got Hamas now saying that they will continue to release the hostages on schedule. There was a threat made to them that there would be some major problems for them if they did not. So it appears they are going to comply. If they do this, this is massive move towards the Israel issue. So that would be lower with the oil, lower demand, military industrial complex winding down at least a bit. We've got Europe is very angry because they're apparently being left out of the United States Russia talks over Ukraine. So they're a little upset about that. Um, but those plan to be moving forward. They look to be coming out quite well from both sides, is the sentiment that I'm seeing. So, with all of this, the interesting part is the Russian ruble surged after they released hostage, if you will, as United States teacher Mark Vogel. So, with all of this, it's boosting their currency. They see them as a strong alliance pair with the United States moving forward, and trade will help. Now, they've spoken about sanctions. With all of these things, if they go through, they could drop quite a few of the sanctions. This would also be a good boost to Europe because they wouldn't have to be paying so much for their third party energy fuels that they're doing for Russian fuel. So I was just speaking about Apple as far as Foxconn and their EV. Now we've also got Alibaba saying that they will be the artificial intelligence partner for them in China. So if you put all of these together, you can say there are shifts happening within this company and that it's quite a large move forward. So just want to put that out there. We've also got China wants to be in the player here. Now they booted out Europe. They're looking at China as far as a host for this summit between the United States leader and the Russian leader, having chats about bringing some peace out forward. Now there was one other, I think, important concession, very small, kind of put in the background, but saying it's okay with keeping them out of NATO. Now, with this agreement, that complicates a lot of things. So, keeping them out kind of keeps that clean on not just a monetary basis, but also requirements as far as coming to one another's aid. So, with all of this, quite a bit going on, just kind of threw that all out at you. It is Thursday. I hope you have a wonderful day. And until I see you again, my friends, stay free.